Hi and welcome to today's morning report on Friday the 6th of February with me, Rich Perry, market analyst at Handtech Markets. The European trading session has got off to a slightly corrective angle to it. There's the fact that the Greeks are going around Europe negotiating with the finance ministers of the key Eurozone countries in an attempt to try and renegotiate their debts, and it seems to be that they've come up against a bit of a German brick wall. German finance minister Wolfgang Schaeuble has sort of come out and said that it's pretty much that they are going to agree to disagree on how this whole process should move forward, and that is pretty much a brick wall that the Greeks could come up against. It'll be interesting to see if the Germans stick to their guns. And subsequently, the equity markets in Europe have just slightly come off a little bit, not too badly. FTSE's only down 11 points, DAX down just over 0.5% on the DAX, 60 points or so down on that. It is non-farm payrolls Friday, and you do tend to find markets consolidate on non-farm payrolls Friday in front of the figures, and I'll be surprised if there's too much more movement either way now as this session progresses. But certainly FTSE looks to be reasonably flat, but forex markets tend to be pretty much flat in front of payrolls, and it seems to be, other than a slight weakness in the euro, the forex markets are, broadly speaking, pretty much settled. Although there is an interesting rebound that's going on in the Aussie and Kiwi at the moment. Aussie's up towards a key resistance at 78.50 is a key resistance on the Aussie, and watch out to see if that one goes. Now, this is the dollar index, and we can see that this consistent dollar correction actually you've got over the past few weeks, really, or couple of weeks, is still in process. And I'll show you a chart here. Sorry, excuse me. Show you a chart here that has shown that this is the 6-week uptrend on dollar index. Now, you'll just remember that length of time, because that is an interesting length of time that also the euro has broken a 6-week downtrend. So that 6-week uptrend is sort of beginning to break down. It looks like it could well correct back towards this 92 and 93.7 back to 92 sort of congestion area. That would be about a 2% correction, and in the dollar that could, and I argued this yesterday, that could be the case. There's a lot of forex pairs that are on the brink of moving away from the dollar. Anyway, so this morning you got the UK trade balance at 9:30. Now that is it's going to come out at 9:30, and the expectation is to slightly deteriorate back to minus 9.0 on that trade balance. So that is that would be sterling negative. A worsening of the trade balance suggests imports are bigger than exports, and that would suggest money flowing out of the country. Therefore, cable should just be slightly held back by that. There is a rally in cable at the moment, but it could be sort of just clipped, have its wings clipped by that data this morning at 9:30. But the big focus today is non-farm payrolls. This payrolls data is expected to come in at 237,000 jobs, and that is just, broadly speaking, in line with pretty much what we've seen. There was a slight spike a couple of months ago, but back towards the sort of mid 250s area seems to be sort of round where we're playing. So 237 is pretty much in line with recent months. Now, the interesting data part of the data could well become the average hourly earnings, which last month showed this sharp dip, actually down negative 0.2%, negative 0.2% on the month, and that was well below expectations. And this month we're actually forecast to come in at 0.3% positive. So it'll be interesting to see if that is the case, because it certainly seems as though that there's quite a consistent bout of earnings just below 0.3, maybe even 0.2%, but certainly if it's 0.3%, that would be broadly in line with the sort of lack of earnings growth that's coming through from the States, and certainly that is a factor that the markets will be looking at, is the average hourly earnings, and if the average hourly earnings misses on the downside, that could be rather rather weaker for the dollar. We had yesterday the international trade for the US, and that showed a widening of the deficit, and that hit the dollar. It just seems as though at the moment that the negative data that comes out for the US is hitting the dollar in recent days. So that takes me to my chart of the day, which is silver. And this silver chart, we've been talking about a gold correction in recent couple of weeks, and this silver chart shows a similar sort of story. We've got, just show you quickly on the intraday hourly chart, this is over the last few weeks, couple of weeks really, and you can see a rather pronounced downtrend actually on this silver chart, linking all these key lower highs. Interesting, because it's just brought us back to, on the daily chart, sort of the neckline of this base pattern, 1730 area, and that seems to be where we've consolidated. In the past few days, there have been quite a lot of candles, or several candles that have been rather small of body and long of legs, which suggests an uncertain outlook. Long-legged candlesticks do tend to be rather uncertain. There's no real overall control by either the bulls or the bears in that situation. It just certainly seems as though around this 1730 neckline is where we're seeing a bit of consolidation. Now, on the momentum indicators, we've got the RSI actually settling quite nicely around 50 area, and MACD lines remain broadly positive as well. So I think this is just the consolidation, and if the silver price can prevent a drop below that 1671 key low that we saw on the 29th, then I think that this could still be just be part of this bigger sort of base pattern that we've got going on, that was sort of a 10-week base pattern. So that could still be in force. Now the big resistance is at 1850, which was where all these key highs happened, and I'll just zoom out quickly and show you the significance of that. This was the big floor that we saw back in 2013 through 2014, all the way up to the final quarter of 2014. So that is a massive resistance on that silver chart. But certainly at the moment we're seeing this consolidation around the neckline of this base pattern, and as I said, as long as we can hold on to that 1671 support, then I think that this base pattern remains intact, and with the momentum indicators fairly positive. So I wish you good luck in your trading on silver today, and I will speak to you later. Thank you.